Hello friends, welcome back to my channel Finance Unpacked with SP. In last videos, we discussed about what are the repo rate and reverse repo rate transactions and how does RBI uses it as a tool to control the money flow in the economy. But it has been observed that there has been certain lag in transferring the rate cut which the banks get from the RBI to the general public. What causes this lag? In order to answer this question, we first need to understand what are the sources of funds for the bank. Is repo rate the only source of fund for the bank so that any rate cut on repo is immediately transferred to the consumers? Well, not rightly. There are multiple sources of funds to the bank. The major being happen, they form a very small source of funds for the bank. The major portion being CASA and term deposits. So we need to understand that the bank are accessing the deposits at 2 to 3%, the CASA, and term deposits in the range of 7.5%, 8%, generally speaking in the current scenarios. Now, even if there is a repo rate cut, the cost of funds that the bank has to offer to its depositors is not reduced. Why? Multiple factors. For example, there may be competition from other banks. They are offering the savings account rate of 3.5%. So even if the particular bank wants to reduce its deposits rate so that the rate at which it needs to pay to its depositors, the cost can be reduced, that they have to link their lending rates with some external benchmark rate. External benchmark rate means the rate at which is external to the bank. The banks internally it is not decided. Two rates have been defined for the external benchmark rate. One is repo rate and another is Government of India's 3-month or 6 months treasury yield bonds. So as and when all your bank's loans are linked to repo rate or the government treasury yield rates, as and when the repo rate or the treasury yield rate move up and down, accordingly your loans also have to move up and down. But before 2019, the banks have to internally choose their rate, which was MCLR, which is marginal cost of lending rate, which is nothing but the cost at which the banks are getting their funds, which is the CASA